Okay, all right. Hi, everyone. Good evening. So we are going to start our today's sessions very, very soon. So today we're actually very happy and we have Max together with us again. So today we'll discuss about one very interesting topic, which is discovering the hidden high-tech gem. So right now it's 8 p.m. Let me start the live in Facebook. Okay. Okay, all right. So first of all, thank you everyone, and also good evening to everyone who are joining this session. So for these sessions, we are very happy that we are able to invite Max to come over to share with us about discovering the hidden high-tech gem. So before we go into the topic, so you can see on the right-hand side is our Telegram group. So this stock market buddies is actually a Telegram group that what we have inside is time to time we actually will share some global information about the stock market, individual stock information. So please join us. You can just scan the QR code and join for the Telegram group and to communicate or to discuss regarding the stock market together with us. All right. So without further ado, let's welcome today's speakers. Hi Max.
Hello, good evening, ladies and gentlemen. Thank you, Darren, for having me today.
Hi Max.
Hello.
Yeah. So let's say if for the audience, if you have any questions, there is a Q&A button below, so you can actually click and put your question over there. So let's say later on, if you have some time and for the Q&A, then Max will take from there as well. All right. So let me stop share and also pass the stage to you. All right.
Right. Thank research once again. But we're gonna talk a bit about the current or in 2023, what is happening in the technology sector outlook. I know in 2023, it's not particularly a good year for technology stock, regardless of what you has been investing in, especially in the first half. Second half, probably you're doing much better. Then we are probably going to discuss about the KL20 initiative and also the uh, special economic zone in Johor, as well as the Singapore region, to talk about what are the potentials or potential opportunities that could stem from there, right? But we're going to talk a bit more about the very interesting region, Singapore region, because as a lot of you all know, Singapore is very well known for what REITs particularly. But in fact, if you look into the technological sector, it's also quite interesting, quite a number of very, very interesting stocks. You'll be surprised who are they actually serving. Okay, so we'll dive on to three stocks later on. I will try my best to, go through and then we discuss about what is happening with the stock itself. Right. So for those who just met me for the first time, hi, my name is Max and I'm the content creator for Want to Invest if you've seen me before. And today I'm also a SGS Academy speaker. So I've been investing in stocks for my own for over 7 years and I'm quite active in private equity recently. But regardless, I'm still quite motivated in studying stocks and everything. And before I start, I would like to do a quick disclaimer. By all means, I'm not a licensed person to give you any form of investment advice. So if you whatever content we do here is purely for for study and also educational purposes. We are not giving any buy sell call or solicitation of buy sell or hold of securities. So hopefully everyone understand we are quite everyone is matured. So hopefully you'll understand the risk implication of whatever we share today, right? So let me go into the contents we're going to talk about. Right. So let's start a bit with a report with Deloitte. So as we mentioned just now, basically last year, 2023 has not been performing so well. And you can see here from the Deloitte's research report, last year has been quite challenging. The semiconductor industry, when we talk about high tech in technology, whatever technology that we are using now, be it augmented reality or the hotcake of the town, AI, we are still going to look back into semiconductor, which is the backbone to support all these new technology innovations. But despite all these new technology innovation, especially in generative AI, which we can see from the ChatGPT, but and a couple more very strong contender in the generative AI, we still see a drop in terms of semiconductor total sales in 2023, which is the seventh downturn in 1990. So for those who are new into the technology or semiconductor industry, actually just like most of any other industry, there's no one perfect industry that can grow forever. If someone told you that and asked you to invest, probably it's a scam. There's no straight line growth in whatsoever industry. So that is the same for semiconductor. It's kind of a cyclical industry. How does it work? When there's a boom, let's say for 2020 and 2021, so everyone shift towards work from home, and then a lot of purchase of electronic devices. So suddenly there's a boom in terms of demand back then. And then you will have something called over inventory level and over capacity back then. So you need a gestation. Typically, semiconductor cycle, we are talking about anywhere between 6 to 24 months. And in that sense, for this downturn, I think we are in 18 months or so, and we are actually seeing much better results in Q3 or Q4 of 2023. That's why 2024, we are expecting to see probably much better, hopefully, finger crossed. And from the recovery of such semiconductor demand, we can look into that region, what kind of stocks that we can actually look into. Now, if you are a Malaysian investor, can I just check who has been actively investing in Malaysia currently? You can put in 1. If you have not invested in Malaysia yet, you can put in a 2. So if you are investor for Malaysian market, I'm sure you're aware that our semiconductor stock are quite favored. And typically, our PE is anywhere around 30, 40 or 20 something, right? So in Singapore region, from what I observed recently, which I will discuss later on, the average PE, I think, is anywhere for trailing 4 quarters. That means that last 4 quarters, in terms of the EPS to the PE, I think it's over 20 something. So regional comparatively basis, I think it's a bit cheaper, right? So back to the semiconductor part. Now, when we talk about semiconductor, what are the largest consumers of the semiconductor, the chips and everything? So PC and smartphone basically is one of the 2 largest consumption in terms of the semiconductor. As you can see, it drops quite badly for 2023, dropped by 14 and 3.5% year-on-year basis compared to 2022. And as you can see here, communication and computer chip sales, including data center, 56% of overall semiconductor sales for the year, right? And even though with the support of data center in 2023, we still see a comparative drop. But moving into 2024, I think in the next over here, right? This is the SIA report. I think it's not in this part. Okay. We'll talk about this page later on. Okay. Moving into 2024, there are quite a number of reports that are actually coming in that indicates that the inventory level for chips and also for the end market, that means on our PC and also our smart devices. And we also discuss about the EV industry, which I think EV has freaked out a couple of investors from, especially after the disappointing earnings from Tesla recently. So we're going to talk about EV as well, and also the value chain of EV, right? How does it impact the value chain? So is it a company issue, or is it the whole value chain EV? We should not look into anything related to EV now. We should just focus on AI and whatnot. We'll talk about it later on. But generally speaking, 2024, Deloitte, the report has actually mentioned the generative AI accelerator chips. So, and also smart manufacturing. So smart manufacturing is in a sense that it's basically automation. So traditionally, in a lot of manufacturing spaces, there's one thing that couldn't be replaced, right? Let's say 5 years back then, that is a loading and unloading of material, right? As technology advanced now, we have automated guided vehicle, AGV, that assist in loading and unloading. So in the high-end manufacturing space, we have something called like sub concept. That means that the whole facility, maybe by 30 or 40 machines, whatever the machine does, maybe they only have one people working over that, right? So smart manufacturing companies that does automation is also likely to be benefited, because now people is talking about we want automation and everything, reduce the labor and everything. So of course, AI is also somewhat correlated, right? You also need machine learning to get this work. And this is interesting. If you look into Malaysia part, we have a lot of assembly and tests. We also need that to complement how the booming demand for the data center and also AI part as well, right? Cyber attack, I think, is a bit far-fetched from us, and we don't have any really direct beneficiaries from this, so we're not really going to talk about this, right? So apart from that, are we really heading into recovery in 2024? So let's look at the report by SEMI. By the way, if you're really interested about semiconductor, probably you can join the events by SEMI, which is on annual basis. So if you look at Q4 2023, as mentioned just now, the electronic sales actually increased by 1% year on year. So you might think that, okay, 1%, what does it mean, right? 1% is so minimal. But this is the first annual rise since the second half of 2022. So we mentioned about the cyclical factor of the semiconductor. This is a very good indication that the inventories level has been paring down, and we are going back into recovery currently, right? So integrated circuit, the thing that we always call chip IC, right? Sales in Q4 2023 actually increased by 10%, and a lot of inventories levels starting to normalize. So in Q1 2024, forecasts are increased by 18% year on year. So now we are into Q2 of 2024. I think even though if the 80% doesn't materialize, probably we will be in the teens, right, of the recovery. So let's talk about capital expenditure, also fab utilization rates. What does it mean for semiconductor companies? So in semiconductor value chain, there are a lot of companies, ranging from companies that design chip or they supply the blueprint or infrastructure, such as ARM. Then we move down along the value chain. We have company that design IC. Then we have companies that to process the wafer and also cut them into chip. Then we have companies that do assembly and testing until the end product, the surface mount treatment, then to basically to assemble the what we call the SMT, surface mount technology, to assemble a piece of complete chip for us to put into the end product side. That's more towards EMS. Then we also have sale of the end product, right? So it's a very long value chain. So capital expenditure is basically an indication for how the sector would go or how the sector would recover, right? Very simple. Let's move back from semiconductor or technology sector, but we talk about some manufacturing companies. So imagine that a manufacturing company, if they are suddenly buying new factories, they are buying new equipment. So what does that mean? That means that they are expected to have growth going forward. So it's very straightforward. Same goes for semiconductor. In 2023, likely they are very minimal, or not minimal, it's lower capital expenditure. And they fab. So we mentioned just now, the whole value chain, there are companies that design, the chips, and also there are companies that manufacture the chips. So these are fab, right? For those who are familiar with semiconductors, so I'm sure you know the fab, what do they do, right? Like TSMC. So they're expected to see a mild recovery starting Q1 2024 after very significant decline in second half of 2023. Of course, TSMC, I think they perform quite well, but we have to consider that a very huge chunk of their sales is coming from the chips that no one else can produce, which is 3 nanometer, 5 nanometer, and 7 nanometer. In the whole world, I don't think a lot of people can do such advanced chips, right? So legacy chip, the chips that we are seeing more commonly, maybe in our electronic devices. So the sales in 2023 probably not performing so well, right? So if we look at if all these things are too technical or complex, we just look at the chart, very simple. So IC sales, memory IC and also logic IC, two of the most consumed IC in the world. So you can look at the trend. Basically, in Q1 2023 is the worst. Q2 rebounded, Q3 rebounded, Q4, and then Q1 2024 forecasted. So basically, it's on a recovery trend. And then on the inventory versus the utilization rate, the blue bar is the total IC inventory. How many chips are in the inventory for the companies? And also the companies that manufacture chips, what are their utilization, right? So I think they recover back to 70 level, look from the low of 66% over here previously. So everything is looking quite bright in terms of the recovery that is forthcoming in this year, right? So after we talk about the chip sector and everything, so we're going to talk a bit about the smartphone sector, right? We just mentioned smartphone and also PC is effectively one of the largest consumption in terms of the IC and everything. So one of the things that if you join my session before, we have discussed before, in 2020, 2021, because we couldn't spend our money to elsewhere, vacation and everything, so a lot of people actually spend money on electronic devices. Now, typically for someone to change their electronic device, like change your PC, change your laptop, change your phone, unless you're someone rich, then probably not applicable to you, but typically the life cycle is anywhere between 3 to 4 years, right? So if you calculate the life cycle from 2020 and 2021, in 2024, 2025, probably we will see a wave of changing the electronic equipments, okay? So excluding the fact of inflation is coming and then spending power is going down, the cycle is coming regardless. So people is likely to buy regardless. So if you look over here, okay, you can see that in 2020, of course, it was impacted by COVID. So the shipment was quite low. And in 2021, right, the shipment actually increased substantially. But 2022, everyone seems bought already, no one else is buying. 2023 also dropped, right? So in terms of market share, over here we can see that Apple, right, they gotten the top position, 20% market share, 229. This one is 2023, by the way. 2024 probably, I don't know if Apple is not going to do something new. Probably they might see some their market share is going to be eaten up, right? So in 2023, because of the change to Type-C, a lot of people are rushing to it because of the Type-C function, including me myself. So I think they got pretty well sales, and then Samsung. Of course, China brands, Xiaomi and Oppo, they are also, these are the market proposition, which we can see down here, right? So this is the global smartphone market share over here. And of course, Huawei got hit quite badly because hardware-wise, I do think it's quite performing quite reasonably, but a lot of people are concerned on the software-wise. So yeah, in terms of competitiveness. So from here, from the market share, again, you can look into the value chain. What companies are likely to be benefited by Apple's better sales? Okay, So these are one of the example in terms of the shipment volume, a bit of very detailed data over here. Then we look into the one of the most followed company in the world, Tesla. So Tesla has been a widely discussed stock, and a lot of people, I believe, they are chasing after them. But I think they posted quite a disappointing result, a 55% drop in terms of as compared to Q1 2023. So this, to a lot of people, is an indication of Tesla is losing market share, obviously, number one. Number two is that from one of the supplier to China EV companies, I gotten the information where that China, they are going for very aggressive pricing. If you are looking into Malaysia, let's be not excluding the brake issue with one of the China brand. So I think they are doing pretty well, especially BYD in Malaysia. The pricing strategy and everything, I think they are doing quite well. But Tesla, I think they has been priced for quite premium, even though in Malaysia, it's a bit cheaper than BBA, BMW, Mercedes-Benz, and also Audi. But regardless, I think it's still priced a bit higher as compared to other EV. So it's a bit losing out on the market share for Tesla. So this trigger another layer of question for a lot of investors. Is the trend for EV over, right? If I invested into EV-based companies or companies that are doing supplying for EV, is the game over for this kind of companies? Well, we have to look on the broader base. Even though Tesla is the leading EV car sales in the market, don't forget that they also have a very high expectation from Cybertruck, which I think over 4,000 has been recalled due to some malfunction. And they are also cutting jobs very substantially. 10% of staff is going to be cut. So this all are showing a quite doom sign for the EV industry. So we have to look on a more macro perspective now. Okay, so this is the report from IEA. Okay, let's look into it. Right. In the recent challenges, so we can see over here, 1 in 3 cars on the road in China by 2030 is going to be electric. So 1 in 5 is going to be in US, and European Union is going to be EV, right? So last year, if I'm not mistaken, the sales of EV globally is around 13 million to 14 million. Can't remember the exact figure, but in 2024 is expected to be 17 million globally, right? In the first quarter, despite we see Tesla just now announced not so good sales, right? But comparatively, we see over here in the first quarter, sales for EV actually grew about 25% compared to the same period in 2023. That means Q1 2024 is performing well, better than Q1 2023, right? Quite similar to the growth rate that's seen in 2022 compared to 2023, right? But you have to remember the base is larger. So last year, maybe 100 cars. So this year, 200. To have the same growth rate, that means that the absolute number of cars EV being sold has actually increased. But I think we have to look into quite geographically basis, where China has been really aggressive in terms of all this EV. Even till now, right? We see Xiaomi, they have a very interesting launch of a car. If they are coming to Malaysia, I think a lot of people are considering getting it, considering the pricing is not really too expensive. Again, benchmarking to BBA with EV standard. So China brands, they are really taking up the market. Of course, we have to consider with the volume going up, this could drive down the price, right? More competitor is coming in on the EV end. So when EV, the end market, they're not performing so well, there could be a possibility that it could impact the supplier along the value chain as well. So we have to bear in mind for this as well, right? But the message I'm trying to carry out, if you guys are interested, you can download the report. I think it's over 100 pages by IEA in terms of the EV supply chain. So it's quite interesting report. And the message I'm trying to carry out that EV basically is not the end of the world. We are still going to see some growth, but you have to be very sector based. And if it's very Tesla related, like one of the companies in Malaysia, I'm thinking whether they will get impacted somewhat, right? So we have to be a bit careful on that when we are going to single stock level. Okay, then for those who just joined, so we are going to discuss Singapore technology stocks today. For a reason, that is, this is the sector performance so far. If you look into the Singapore sector performance, actually we should have looked earlier, but unfortunately the session has been arranged to today. If you look into the 3 years average and also their recent price to earnings ratio for the whole Singaporean technology sector, actually this has already shown a sign of confidence of recovery. If you're following Singapore stocks also, technology stocks, there are quite a few of a bullish report coming out for the 3 companies we are going to discuss later on: UMS, AEM, also Franken. And again, quick disclaimer: no buy or sell call for these 3 companies. Is merely for our discussion and looking into some of the samples that could be benefited in the industry, and also comparatively geographical valuation basis, right? Okay, so this is how it has been performing recently. So if you look over here, in fact, revenue has not been performing so well, but this is up to Q4 2023. So based on we have looked into the semiconductor recovery in 2024, Fab, they are likely to have better utilization rate in 2024. IC inventory level is also going down. EV on an overall basis, even though Tesla got impacted, China side is still doing relatively well. And for generative AI or AI in general, so it's going to have a huge demand in terms of GPU, but GPU is more towards companies like NVIDIA. And another sector probably can look into the supplier for the data center. So which is in Malaysia and Singapore context, we can look into the special economy zone in Johor, Iskandar, Malaysia, Johor and Singapore, right? So we will talk about that region particularly later on as well. So based on all these statistics, I have a reasonable ground to believe that in 2024, technology stock for not only Singapore, but on general regional basis is going to perform well, right? And let's also look on some more information in case you want to know a bit more about the sector. Now is a bit of optimistic, but I have to clarify for you. The 3-year average PE for the whole sector is around 16.4 according to Simply Wall Street, which is normally it's quite accurate. And over here you can see, right, earnings has been dropping quite substantially to 35%, and any movement in price, it would significantly increase in their PE. So let me explain PE for those who are new. Basically, the formula of PE, as everyone knows, is price over earnings, right? But when earnings, obviously in 2023, they are suffering from the lower demand, okay? We have to go back into the valuation we mentioned by the beginning of the webinar. For chip, for design, or for the front end market, normally they will experience the first-hand recovery first. Then when they see, okay, my chip orders are recovering, I'm seeing more orders coming in, probably it's time for expansion, right? And then in Singapore part, the companies are mostly in the more towards back end or front end of the back end, right? More towards back end for the semiconductor industry. So they need to see front end, we receive very good order. Now it's time for expansion. After discussion, then we expand. We give order to you, which you also take time to deliver the orders and which will be reflected into earnings. So it takes maybe 2 to 3 quarters from front end to reflected into back end in terms of the earnings. But of course, sentiment wise is a bit different. It has been dropping quite substantially. So now, of course, recovery is here, right? So that's why there's a divergence between the earnings over here and also the overall share price performance. Okay. So this is the subsector of the Singapore market. Yeah, so basically, and this is the consensus of the analysts, and I wouldn't be sure about the expected earnings growth is a bit optimistic, but we are somewhat in a low base scenario. Okay, now so let's move into one of the first company we're going to have as a case study. Okay, which is UMS Group. Again, no buy or sell call. We are all very matured people, so we take our own risk when studying. So UMS, let me share another screen. Okay, wait, before I share another screen which showcase the financials and also financial data of the company, P of the company, let's briefly go through what does the company do, coming from me as a layman, right? And if you are familiar with Malaysia semiconductor market, in 2021, 2022, basically one of the few factors that are very much favored is the precision engineering or precision machining company, right? We have UWC, we also have Coraza, and then we have the newly listed SFB Tech. This company, they fetch a very rich valuation, which is around 60, 70, right? Even now, I think they are still fetching 40, 50. But UMS comparatively, I think they are in the teens. So it's very interesting to see a geographical difference and also the valuation huge difference in between. So not to mention the SGD exposure if you were to invest back then. And then okay. So precision machining or precision engineering is basically they will get a block of matter. So let's say a rectangular block of matter. So they use the CNC machine, whatever axis it is, 3-axis, 5-axis, 7-axis even. So they would machine it into some precision equipment. So when I mention precision equipment, there's a certain level of demand in terms of the tolerance. Like what is the difference between my requested spec? Okay, let's say if it's 10 micron larger, then they wouldn't accept it. So it's very important to be precise, right? So I think for UMS, they are supplying to Applied Materials, which is one of the very huge company in US. You guys can have a look on it, Applied Materials. So what they do is metal finishing as well. After you craft the piece of metal block and also into a precision part, so you also need to do some finishing. So anodizing, nickel covering, plating, and everything. So from my understand, the Singapore market, surprisingly, they are doing relatively well in terms of the surface treatment or surface finishing, right? Comparatively to Malaysia, from my conversation with some of the local player. So sometimes they need to send the finished parts they do in Malaysia, send to Singapore for surface finishing. Okay, so this could be one of the competitive advantage. Then system integration. So basically, to in layman term, is the assembly part. Refurbishment of one of the parts and everything. Then we have prototyping. Normally we call NPI, new product implementation. Okay, so when a client, there's two types of precision engineering. So the first type is client come to you, say that, okay, I want this design to come out, and then I want to see the spec. And or the client come to you with a design, and you need to work out the prototyping, right? So when we go into prototyping, it's something different than mass production. Prototyping, they take out a lot of resources, but the volume is small. So the pricing is higher. And of course, the margin is higher. Then we have the mass production part, which the margin is lower because they can automate the whole processing. So prototyping as well. And this one is basically concession, just managing inventory and whatnot. Okay, so this is for UMS comparatively to some of the companies in Malaysia. Then let me share with you. Okay, so one of the two to look into the Singapore stock. Let me see if it's too small. Is the size okay? If it's not okay, please comment and comment a no. If the size not okay, not clear enough for you to view, I hope it's large enough. Okay, because from my end it's quite small. Right. So this is UMS for Singapore. This app is basically everyone could get it. They have some. I'm not I'm not going to promote them because this session is purely educational. But if you're interested in getting in, I think they are giving out NVIDIA at the moment. So maybe you can ask Darren for the links and everything if you want to sign up. But again, it's not guaranteed that you get NVIDIA. Otherwise, everyone rush to get it, right? So back to UMS, I think that analyst TP is quite nice, 1.7, and their PE now is 14.55 compared to Singapore peers is 14.70. Right. So this company, who are they supplying to? Semiconductor industry, 86%. This is based on 2023. Aerospace, they are also involved. As you can see, aerospace is recovering quite well currently, aerospace industry and also others, 5.73. So the mix of the revenue of this company is a bit similar to SAM Engineering in Malaysia. Of course, there is a difference in terms of the PE, right? And in terms of their earnings, okay, on the orange color line is the estimation, as you can see over here, estimate by S&P Global and also analysts. And the blue line represented the actual earnings they delivered. Obviously, there is a prediction where the company will perform badly in 2023 Q1 because, as you know, the whole industry is not performing well. So they are reflecting a bit slower than expected because even though the front end they're not performing well, they might have legacy order to deliver. After they deliver, then we can see in Q3 it's more closely related. So in Q4, there are expectation that the company would see recovery in terms of earning. But again, as I mentioned just now, precision engineering, you have to understand precision engineering, what is the end product for? It's usually for the semiconductor equipment or whatever equipment it is. Or for aerospace, probably is the body kit for an aircraft. But for semiconductor, again, we mentioned about capex space just now, which is a bit far from the reflective from the front end. So imagine the supplier for the equipment is going to take a bit even longer in that case. Okay, so again, they are performing probably not so well. You can see their EPS is dropping. This is the indication of year on year. How do they perform? Okay, so for the past 3 quarters, year on year, basically they are still dropping, and quarterly basis they're still dropping, and all right. So this is the shareholder structure. Basically, the shareholding structure is quite fragmented, if you ask me. And one of the things is a bit out of topic here, but when you are choosing whatever stocks to invest to, bear in mind that the more the shareholders in any company, there are more voices, and whenever the share price go up, there's a higher possibility that more people come out and sell, right? But if the founder or the institutional investor, which owns 14.70, normally they will hold on. Their holding period is a bit more longer than retail investors. Okay, so interestingly, now a lot of this is valuation comparatively to cash flow kind of thing, right? So go back here, free cash flow. Okay, apart from Q3, they actually have a quite positive cash flow overall. This is after the capex, after whatever capital expenditure that they have, the actual cash flow the company generating. So whenever you're looking into any technology company, bear in mind you should also look into their cash flow, whether they are performing well or they are burning cash. So when they're burning cash, there's a high possibility either they need to finance themselves, which would increase the interest cost for them, or they would need to dilute their equity to raise fund, right? So there's a tendency for dilution whenever they have a cash flow issue. But for UMS, I think they are doing pretty well over here. So free cash flow is performing really well. So this is where we see here as well. This is CFO. Cash flow from operations, they are still very positive here, apart from this year, where investing, I think they invested quite a bit over here. Yeah. So back to dividend. So normally when we are investing into technology stock, the dividend yield is usually somewhere between 2 to 3%, right? But for UMS, I think they have ample cash on hand. and they are paying out quite payout ratio 71.51, which in fact, this number is a bit too high for me. That means that for every $1 the company earns, is paying out 71.51 cents to shareholders, which I normally would prefer the company, if they have the room for growth, I would prefer them to reinvest the money. Normally, payout ratio around 50% is more favorite. But regardless, it's still giving you a 4.89% of yield, which is quite nice when you can enjoy the recovery of the semiconductor sector while getting 4.89% return in terms of dividend per annum. So yeah, it's quite fundamentally sound kind of company if you're looking to the semiconductor, generally speaking, right? So let's get back into another company. Okay, so yeah, a bit of update into UMS. This is the analyst report. I think this one by DBS. So DBS actually updated, they have some new initiative. Okay, so over here. Okay, so they recently built a new plant which is focused on medium or large format products. So it's for, just now I mentioned precision engineering normally smaller, but I think this plant is maybe for medium or larger format products, maybe for larger cases, or maybe for aerospace, right? And I want to highlight the issue here is China plus one strategy. For those who have not heard of China plus one, I think this is very critical, at least for the one this year and next year, when you look into semiconductor space. We know that there is a very high technological tension between China and US currently. So there are a lot of sanctions and restrictions in terms of technological transfer. And imagine you are a company not from China, not from US, but you have a manufacturing capacity, manufacturing facilities in China. Then you got sanctioned. You got a lot of restriction in terms of manufacturing capacity. And one of the issue with China region is the switching in terms of their policy. I think you guys have have seen it. The gaming sector, out of nowhere, they slapped some new policy, and then Tencent, I think, just there goes your market cap, right? So China plus one is a strategy for a lot of companies. They have base in China, because China for the past 10 years, they have been very cheap in terms of labor, and there are a lot of initiatives supported by the government to have a plant there. But now it's time to move up from there. Then in the regional basis, then we have to think, where else can they move to? One of the place is Malaysia, Vietnam, Indonesia, and probably Thailand. Thailand is more towards automotive, but think of a more comprehensive or holistic kind of ecosystem ready for semiconductor. Where do you first think of? Which is Penang, obviously, which is Malaysia. So the plan for UMS, although it's listed in Singapore, their new facility is in Penang, and I think the square feet is the 300,000 square feet compared to 500,000 square feet, right? So recently I learned something from an engineer, which is a very, very experienced engineer. For any engineering company or EMS company or technology company to substantially increase their capacity, which is, you can see over here, 500,000 square feet for the previous floor space, and 300,000 square feet in the new plant alone. So there's a 60% increase in terms of square feet area. And the cost is 250 million ringgit. So if you ask me, if I were the management, without a substantial order that I think I can secure, or the substantial recovery coming back at least, would I invest such a substantial amount into building a new plant? For me, at least, I think no at the moment. So it's a bit interesting to look into UMS currently now, given that I think, wait, let me go into the share price. Okay, a moment, guys. Okay, I'm gonna share the share price. Okay, so for past, let's see, 5 years. Okay, On overall basis, I think they are quite flattish over here, I would say, on 1 year basis. Okay, I think the chart is not reflective, but never mind. I think it's quite flattish. There's no substantial uptick yet, which when we are buying into, as a value investor, I think that's a good indication that I'm not buying something. I'm not going to buy something that has spiked, which has reflected in their share price, at least for my style, right? And again, Applied Material, I'm pretty sure they are already in AI and also IoT. IoT is something more mixed for me, IoT. We have ERP and also we have smart home and smart everything, which is related to IoT. It's a bit more unclear as compared to AI for me, right? So for the TP by this analyst is over here. You can search this report online. So yeah, I think it's quite interesting to look into this company at the current moment. And okay, I think we going to talk about AEM and then we go into Q&A due to time constraint. So AEM is the test cell solution. So test cell solution, or what they call TCS, is the largest contribution in terms of their what we call their revenue contribution. So as you can see here, test cell includes burn-in. So burn-in in Malaysia, we have another company that does burn-in, KESM. Their holding company or mother company is also listed in Singapore, Sunright Limited. And okay, what does burn-in mean? So basically, burn-in test or chips or whatever they're testing, maybe it's an end product. Burn-in test is basically to push the chip into a very harsh condition to test whether how long can it last for the burn-in test results, right? And before they publish, maybe there's a final test and also system level testing over single platform, right? Single platform, that means that a single device. And also they have wafer probe. Wafer probing is basically to probe, basically to touch the wafer, in a sense, to see whether there is any defect. I'm not too technical into this, but basically that's MEMS sensor wafer is related more towards the front end part. Okay. And also they have automated test equipment, ATE solutions, and cable test. If you see something interesting here, Ethernet and also fiber optic cabling, validation testing. I think out of all these things that AEM is doing, something not sexy is probably the precision cable test. But if you look into Ethernet and fiber optic, right? The data center that are very hot in the Johor region now. So a couple of things that they need. Number one is the rack for server, which is I think largely made from aluminum. Number two is the SSD or the processor server, and then you need a cooling system. And for the integrity of the data or networking equipment, we need cable, right? So this company is also doing this, which is quite interesting, right? And of course, they are more towards the testing equipment. And if you look into testing equipment companies in Malaysia, we have a lot of testing equipment in Malaysia, really a lot. We have we have Vitrox, we have Penta, we have QES, we have a very high number of it. So again, it's back to valuation and also the growth story of it, right? And AEM, one of my friends told me back in COVID, a bit regret I didn't go into it by then, but sorry, I'm gonna share to you the fundamentals of AEM now. Give me a moment. Okay, AEM, as you can see here, the share price is not performing so well on 1 year basis. So back to the story. My friend actually told me about AEM back in COVID times, but I'm a bit too focused in Malaysia. I also earned some money back then, but AEM valuation wise and also the upside wise is also quite interesting, right? So again, now if you remember, we look into the overall technology sector performance in 2024 year-to-date basis. The overall PE has increased, right? By some particular stock, or the PE increase could be due to the drop in the earnings for some companies, right? For AEM, I think for now it's still quite let's look into the fundamentals. So TCS, largest revenue contributor. Contract manufacturing is a bit more comparatively to YBS in Malaysia, YBS International, and SAM Engineering, they also does contract manufacturing, and some EMS, they also do contract manufacturing as well. So these two are the largest revenue contributor for them. Again, in terms of the financial estimations, to our surprise, I think ADE, the testing equipment, is a bit more closer. The analyst is actually more accurate. In fact, they underestimated the company's performance based on the consensus over here, right? The revenue performance. So cash flow wise is also performing quite well over here. We can still see, sorry, why is this 20? Okay, I'm not sure why it's 2019 just now, if you notice. Now it's to annual basis. In 2022, they actually have a drop in terms of their free cash flow, probably based on capex. But in 2023, it recovered positive cash flow, right? And profit-wise has been profitable. Again, they are showing 2019 data for some reason. So in 2023, obviously, the earnings dropped quite substantially, again, due to lower demand. But we're going to look into the valuation later on, right? And balance sheet wise is quite healthy, and the cash flow CFI, you can see that they are investing quite a lot in these 2 years, right? A lot of capital expenditure going on, interesting. And in this year, even though they invested a lot, but their cash flow is still quite positive. So interestingly, if you look at their shareholder profile, you can see Temasek Holding, right? In Malaysia, SAM Engineering, I think the single largest shareholder is also Temasek as well. And EPF actually also invested in this company, 11% shareholding. Aberdeen is one of the very famous company. I think a lot of you seen buying of Aberdeen. Fidelity, obviously another very famous fund. And dividend yield comparatively is a bit lower compared to UMS, right? And so, okay, for this company, okay, let's go. This is PS where for some reason they're using PS. Okay, so let's go to the analyst report for this company. Okay, over here. Okay, so as you can see over here, AEM, it mentioned that they won a very huge volume order. Again, volume order, it doesn't mean that it's 100% good, but at least it's mass production, margin could be lower. AEM, one of the major fabless, I know AEM, they do supply to Intel, but when it mentioned fabless, that means that some IC design houses without a fabricating facility. So fabless, probably not Intel, right? For high HPC and AI semiconductor chips, could be Intel, could be not, but I don't know why they put fabless. But they got the HPC and also AI is largely used in where? Again, in the data center and AI sector. So one of the sector they're gonna be benefited. So guidance wise, I think they are quite conservative management of AEM. Sing dollar 170 to 200 million, right? But this analyst from Maybank, Singapore, does have a bit more positive kind of view onto this company, right? And Q1 2024 should be weak, but expect a better re-rate. In terms of re-rate, that means that there is a re-rating in terms of the valuation, maybe from 15p to 18p, that could be a re-rate. But I think probably Q2 2024, conservatively speaking, is going to take a bit of time to recover. Same goes for UMS as well, right? And this is more important. For second half of 2024 forecast, AEM could be benefited from their main customer, which is the company we mentioned just now, right? And they are giving more bullish 2024 outlook. So this is largely in line with what we have observed just now. The PC, smartphone sales, semiconductor outlook by SIA, and also the inventory level of chips, and also the fab, their utilization rate and whatnot. Okay, so there's an upgrade from hold to buy, but I don't think they have a okay, they have a mentioned target price actually. 15 times PE. So again, if you look back into the Malaysian market, if we talk about the what we call valuation basis on regional comparatively basis, so yeah, quite interesting when you compare two regions. Okay, so we have a bit more time. So bear in me. If you have any questions, feel free to type in the box. I'm gonna close it with this last piece of information here. Right. Oh, I don't have time to mention KL20 as well, but it's okay. We talk about something. KL20, I think a lot of people will talk about it. SEZ, special economic zone between Johor and Singapore is something more interesting, right? So over this report, this is by Maybank, right? Over the special economic zone, when we look into Malaysia compared to Singapore region, our advantage, like it or not, we have lower cost in terms of labor, rental, and utilities over here, as you can see. So China plus one strategy, we mentioned just now, they would force their value chain to move out from China, not move out completely, but at least partially move out from China, right? And they have to look for some places in Southeast Asia, right? So Malaysia, with the coming back of the father of Pendrive, right? He's investing into Malaysia. He's going to set up a new AI company in Malaysia that does IC chip design, AI company. It's called My Storage, right? So they are setting up in Selangor. So this is a bit different. This is in Johor. With the political stability now, comparatively basis, for those who are very politically sensitive. Comparatively, Malaysia, with our political status, is more stable now. And also we are having this special zone together with Singapore, which is the regional financial hub, to share the special economy zone. I think this plot of place, we will secure a lot of blue chip clients. In fact, Malaysia, we attracted ARM Holdings into Selangor for the IC design park, right? That one is in Selangor. But imagine data center hub, a lot of them data center facilities in Johor. Now we have a special economy zone that give more incentive for global technology company to come over. It's more interesting. Okay. So coincidentally, I think also looking into this company, Franken, unfortunately, we don't have really a lot of time to look at it. But Singapore-wise, I think the most traded companies from 2021 to now for technology side, most traded apart from iFast, semiconductor base, I think it's these three companies, right? So with this special economical zone and also their exposure to certain industries, so I think quite a lot of interesting things that we can see regionally over in the Singapore technological sector. Of course, I would strongly encourage everyone to go study deeper to look into their annual report, analyst report, and whatnot. But hopefully, I give you a very holistic view of the technology sector, how it look like going forward. Okay, so I've been talking a lot. So hopefully you guys at least you've gotten something out of it. And if you have any questions, probably you can take one or two questions and feel free to do so. If not, I take it as a my failure because you guys are sleeping now. It's too boring. The session is too boring. So hopefully it's not lah. Okay, so over to you, Darren.
Hey, Max, thanks so much for the sharing. I think you have shared a lot of information with the research report and also different sources as well. So let me just do a quick share. Okay, all right. So thanks for Max today sharing. So I'm from Investing Note. So Investing Note is actually a social media platform. We have different kind of informations and also platform that for you to use. So feel free to come and join for the community and discuss about the stock market, can discuss about Singapore market and also other stock market as well. Okay. So just a reminder, the Telegram group Stock Market Buddies is also a Telegram group that we have. inside we focus about talking about Singapore stock market, US, Malaysia as well. So feel free to join on this, and we'll share more information, and feel free to interact with us. And also another one is join the largest investor community in Singapore. So let's say if you're interested in Singapore market, it's actually a very good community for join and learn more about investment in Singapore. Okay, so let me stop shares. All right, so today it's already 9 p.m. Once again, thank you so much, Max, for the support, and thanks everyone for joining for today. So we will see you in the next sharing session. All right, thank you, Max. Thank you, everyone. Good night. Bye bye.
Thank you, everyone. If you have additional questions, feel free to come to me or Darren. I see you again in the next session.
Thanks, Max. Thank you. Bye bye.
Thank you.